The global M2 money supply is growing at one of the fastest paces we've seen in the last 4 years, with over $7 trillion added into circulation during that period. So while most people obsess over price charts, there's a much bigger force at play, and that's global liquidity. So in this video, we're breaking down how this massive flood of money is impacting Bitcoin right now, why the old 4-year halving cycle is becoming less relevant, and why an asymmetric buying opportunity may be emerging. So let's dive in. Now, I guarantee that when you hear most people talk about Bitcoin, what they're really talking about is just the price. And that's natural. Their headlines always revolve around whether Bitcoin is going up, down, or just breaking through a new level. But focusing on only price misses half of the equation. Because yes, Bitcoin's supply and dynamics really do matter. But the other side of that equation, which is the denominator you're measuring it against, i.e. the US dollar, is equally just as important to consider. Unfortunately, it's much easier to analyse than the extremely complex area of Bitcoin's supply and demand dynamics. Now, we all know too well that the dollar is far from a stable benchmark, and since the pandemic, M2, which is basically the broadest measure of money supply we have available, has grown by around 42%, which equates to about $7 trillion added into circulation. So when the denominator is being inflated at that kind of pace, it becomes impossible to ignore that impact that it has on Bitcoin's value in dollar terms. And that's really the key point here. You can't just measure Bitcoin in isolation. You also have to measure the ever-expanding pool of cash that's sloshing around the global financial system. And over the past decade, we've seen a very clear shift. Bitcoin cycles are less and less tied to the old 4-year halving narrative and more tied to global liquidity cycles. It's really no longer just about how many coins are being mined, it's about how much money is being created and where that money is flowing to. And that's why I think this cycle has the potential to surprise people. Historically, Q4 of this year would be the classic choice for a Bitcoin peak. We saw it in 2013, again in 2017, and again in 2021. And yes, that pattern is burned into trader psychology. But when we look at the current conditions, it doesn't feel like that we're aligned for a true peak yet. But could it still happen in Q4 of this year? Well, sure. Markets can always move faster than anyone expects. But the backdrop really doesn't suggest that a blow-off top is imminent from where I'm sitting. Instead, when I look at the liquidity cycle, the very cycle that Bitcoin has been tracking so closely for a while now, I don't see a topping structure. I see an expansion phase that still has fuel left in the tank. Now, if we zoom in on my global M2 liquidity year-over-year percentage change chart, which is a bit of a handful, the picture becomes very clear. Since May, while Bitcoin's price has been chopping sideways near its all-time high, global liquidity hasn't slowed. It's actually kept climbing relentlessly. And that trend matters because historically, Bitcoin reacts to liquidity with a lag. Liquidity moves first and then price follows. So when we see this kind of divergence, liquidity surging while Bitcoin stagnates, it's hard not to feel medium-term bullish on the asset with a backdrop that's supportive. I chose to calculate the year-on-year percentage change because it tells us how fast this pool of money is expanding or contracting compared to the same point 12 months ago. And that's important because markets don't just care about the levels of liquidity, they care about the rate of change. Are we adding liquidity to the system or are we draining it? Now, it's true that we're not at the extreme levels of liquidity expansion that we saw in the previous cycle, where central banks were injecting money at an unprecedented rate. And whether we see that kind of expansion environment again is another question entirely. But what we do currently have is consistent growth. Global liquidity has been expanding at roughly 6 to 10% year over year throughout the whole of 2025. And that might not sound dramatic, but in the context of global markets, it's a powerful force, and it's one that can't be ignored. Now, the next tool I want to bring into the picture is the global liquidity momentum. The year-over-year liquidity view is great for spotting the big structural trend. It shows when global money supply is generally expanding or contracting over the past 12 months, but it can be slow to reflect the more immediate changes in liquidity, which can matter a lot for short-term market dynamics. And that's where this cyclical momentum measure comes in. Instead of just tracking the annual change, it compares recent periods against each other to see whether liquidity growth is accelerating or slowing. Now, looking at the current setup, this indicator has been signalling positive momentum since April, which historically is a very long period for uninterrupted expansion. And in practical market terms, it means that while Bitcoin has been chopping sideways near its all-time high, the underlying fuel is still building. What's particularly interesting now is that momentum is still trending upwards, even after several months. And that reinforces the broader year-over-year picture that global liquidity continues to expand at a healthy pace, and that the market hasn't fully priced it in yet. For me, this is a clear signal that conditions remain supportive. It's not a time to be defensive yet, I don't think, but rather to watch for setups where Bitcoin could respond to this ongoing surge in liquidity. And historically, stretches like this often see price consolidation before a strong upward leg, rather than rolling over immediately. Now, if you want to quantify how closely Bitcoin itself is tracking these liquidity conditions at any given point in time, the best way is via correlation index. And this particular one of mine works by taking Bitcoin's year-over-year percentage change and then comparing it directly to the year-over-year percentage change in global M2. A correlation of plus 100% means Bitcoin is moving in perfect sync with liquidity, and a correlation of minus 100% means that it's moving in the exact opposite direction. So when you're looking at this indicator, what you're really seeing is liquidity acting as a tailwind or a headwind for Bitcoin? Well, right now, as we've seen, global liquidity is expanding at a strong pace and momentum is positive. Yet Bitcoin's price action has been chopping around sideways, looking to find its footing. This has made the correlation flip negative, and right now it's sitting at around 31%. What that means is that although liquidity is surging, Bitcoin hasn't been keeping up. And that divergence is extremely important to pay attention to, because historically, when liquidity has been this strong and Bitcoin has underperformed, those periods have set up some of the best buying opportunities. Price may lag in the short term, but eventually the tide of liquidity asserts itself, and when it does, Bitcoin tends to catch up very quickly. Let me put it this way, when all things are equal and the liquidity trend is clearly positive, Bitcoin cannot stay flat for too long. This is why I always stress the importance of looking beyond just Bitcoin's price chart. The price is the outcome, but it's simply the reflection of the deeper forces at work, and one of the most powerful forces shaping asset prices today is liquidity. So yes, halvings and supply reductions do matter, but the narrative that Bitcoin's price is strictly dictated by a 4-year cycle is becoming weaker and weaker with every passing year. What really matters, besides the obvious supply and demand factors, is liquidity, and right now the liquidity backdrop looks anything but exhausted. So overall, my take right now is that we're in the middle of a classic liquidity-driven expansion and that Bitcoin just hasn't caught up yet. With M2 still growing at one of the fastest paces in the last 4 years, and momentum staying firmly positive since April, I think this all-time high consolidation phase is setting the stage for further price growth over the medium term. And that definitely doesn't mean that we'll rocket straight up. The market can stay choppy or relatively bearish in the short term. But with this kind of liquidity backdrop, the probability skews heavily towards Bitcoin breaking higher into 2026 rather than forming a premature top here in 2025. In other words, the fuel is there, but the engine just hasn't fully ignited yet. So, to wrap things up, the big picture here is that Bitcoin isn't just moving because of halvings anymore. What's really driving its cycles now is liquidity. And now that it's been adopted on an institutional level, the flow of money through the global financial system has become the dominant force shaping price action. So by understanding the liquidity dynamics at play at any given time gives you a much clearer lens of what's likely to come next. And looking at the raw numbers, global M2 has been expanding steadily at roughly 6 to 10% per year on a year-over-year basis throughout 2025. That's a meaningful and persistent tailwind for risk assets like Bitcoin, even if it doesn't always feel obvious in the day-to-day price action. And while Bitcoin's price may be chopping sideways or consolidating near its all-time high, the underlying tide of liquidity beneath the surface is still rising, and history shows that periods like this often lay the groundwork for the next substantial push higher in price once the market begins to fully absorb the flow of money. And finally, if you examine how Bitcoin is currently correlating to that liquidity, there's a very clear divergence forming. Even though global M2 continues to expand strongly and momentum remains positive, Bitcoin itself has been lagging behind. And paradoxically, that underperformance is actually a signal worth paying attention to. And historically, when liquidity is abundant but Bitcoin hasn't yet responded, these are the periods that often precede sharp upward moves as the market catches up to the liquidity backdrop. It's a setup where patience is rewarded, because from what we've seen today, the fuel is already there and it looks like it's waiting to drive the market on its next meaningful push higher. If you're serious about Bitcoin analysis, my full custom indicator suite is now live, built for investors looking to gain an edge through deep cycle signals and advanced on-chain insights. It's available now through the link in the description, where you'll also find my free newsletter. And if you found this valuable, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. And I'll see you all in the next one.